Are you ready for some March Madness? This is Accounting Madness. This is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. Back with me today is Matt Charney, audit director at CLA. Welcome back, Matt.
Thanks, Brad. Great to be back.
Yeah, I got you out of that. I got you out of the sea. I like it again. And we have a new guest today, Justin Calabota, an audit senior at CLA. Welcome, Justin.
Thanks for having me.
No
hints.
Yeah, it's very formal. Yeah, Frank doesn't do that. Wow. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. Quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA or CLA. Okay, so I noticed that the FASB and the AICPA does what they call a post-implementation review. Mm-hmm. So they come out with guidance, they ask for comment. People tend to sometimes give comments on it.
Right.
I personally think they ignore a lot of the comments, i.e. amortization of goodwill, consolidation of our VIEs, and all of a sudden, years down the road, they're like, we are so much smarter now, we're going to change it. And why they didn't just accept a lot of the comments earlier, but anyway. That's why the statements are my own and not, okay? So, but here's what happens a couple years down the road, they will do a post-implementation review. Mm-hmm. So, SAS 143 came out and was effective last year, and that's the auditing. The title is Auditing Accounting Estimates and Related Disclosures. Mm-hmm. So I figure, and Justin, you're a senior, so you're the one that's really involved in a lot of the activities going on in engagements.
Yes.
I wanted to hear your comments too when we get to some of the areas as to what it's like being involved in auditing the estimates and what some of your thoughts are. Because I just sit there and go, do this and then criticize it.
Yeah, right? A lot of it. A lot of criticizing.
I don't want to hear that. Okay? I don't need to hear that. Blame Matt. Okay.
Only leave a few notes.
Just a few. So real quick, I'll go over what some of the requirements are on 143. One of the articles, you can find it right on the internet too, and I guess after a while they make them public, but it was the CPEA, the Center for Plain English, which is a subscription service under the AICPA.
Sign up now.
Yeah, but the problem is, what I don't like it, is that they come up with some really good guidance. One of the things was the income taxes for PTET, accounting for PTET. Mm-hmm. And people are relying on that as how it should be treated. But it's a subscription service.
Yeah.
So
the Center for Plain English isn't the authoritative guidance.
It's not
authoritative.
authoritative.
Be clear on that.
That's great
to
comment. Yep.
A good interpretation of the guidance in, quote, plain English, which
right.
is why they call it plain English. Hopefully it's less legal jargon and more, maybe we suggest you do it this way.
But if somebody doesn't account for the PTET the way CPA recommended, and then a lot of the Big Four put into their guides, mm-hmm. if they don't have a subscription, how are they going to know? So it's a little bit bugs me. But CPEA, right. They think they put out good information. So as Justin said, I recommend you look into signing up because there's some really good information there. Mm-hmm. So they put out a nice summary of 143, and I'm going to read off just a few pieces of it. CPE says that 143 does not so much create new requirements for auditing estimates, but rather improves, expands, strengthens, and modernizes the requirements and application material. Provides greater emphasis and guidance on applying the risk assessment procedures. They've really focused on the risk assessment procedures around estimates. I'm going to be honest, I've done peer reviews, and I think they've confused it more the way they say it. Even when I'm reviewing our work papers in our office, the checklist is called something like assessing risk of estimates, and I'm like, why don't we just call assessing, understanding estimates? Anyway.
I'll make a comment on that as well, Brad, because I think confusion comes from that risk assessment procedures piece. And a lot of the questions that you'll see in the checklist that try to follow this new guidance are asking you to write down how management thinks about where their risks are, how they're evaluating it, and it's much more geared towards leading you to document not necessarily why they think a risk is what it is, but how they came to that conclusion. And it's less concrete than just saying management believes this is risky because A, B, or C reason. And it's much more about management came to the reason that this is risky because they're doing so-and-so review, or they're comparing it to this metric, or they're focused on their income, or they're focused on tax motivation, something based along those lines that would lead you to believe that their procedure is based on some kind of bias or other methodology that leads them to estimate risk in a certain way. And that becomes difficult to describe in words when you're talking to somebody through a work paper, and less so when you have a conversation with somebody and garner their feelings about how they would assess a risk.
And you made one big phrase, management bias.
Right.
That's
Right.
really where it comes in. One of the words that we see, and you've prepared the checklists a bunch, I know, is how sensitive are these estimates? And you, before I'm going to get back to it, you raised one word you used was documentation, and says 143 explicitly indicates certain documentation requirements that the previous guidance did not. Now, I know that some people, I'm not criticizing any software out there that people use, any third-party aids that people use. We used to use a lot, but one of the guys that's out there is PPC has and I don't know what the new version is. They used to have an estimates checklist, and people used to go down and mark off all the estimates. It used to be called significant estimates checklist, and people still go down and mark off all the estimates. And I used to sit there and criticize and say, these are significant estimates. Depreciation significant estimate, well, it could be a big number. A significant estimate is an estimate that could change in the near term, and that change could be material. So there are very few significant estimates, but now we talk about more sensitive estimates.
Right.
That may include more management bias.
Exactly. And the key that I like to tell my teams when we're working on this kind of stuff is, if you know what all the inputs to your estimate are, you may not necessarily know what the final number is going to be, because that could change based on interest rates or fluctuations, and if we're talking about stock volatility, something like that, that would be a lower estimate, or a lower uncertainty, estimate. If you don't know what all your inputs are, maybe it's contingent on something, maybe there's a lot of bias, there's a lot of feelings involved in this, and that's where it gets very difficult to understand where your estimate is coming from. Now you have a higher uncertainty. Would you agree with an assessment like that?
Yeah, I agree completely. And
Great.
I think that there's fewer higher uncertainty, and I don't know if you've seen a lot of them, because you've worked in different areas. The common areas that I see estimates are allowance for credit losses, right? Fixed assets, the lives, impairment of long-lived assets, because now management is determining if it or is not impaired. Yeah. That's all we can laugh at. Is management actually doing it, or are we doing it? But that's besides the point.
Management, of course.
Yes,
Of course.
Of course, management. Well, they have to accept responsibility on their non-attest. Self-insurance is where I see a big one. Litigation is where I see a big one. But we were talking about this in the office the other day, and accrued expenses, by their nature, are estimates.
Yes.
Okay, and I don't care if it's accrued payroll. Management is saying this is when we think the cutoff is. Now, it could be very straightforward. It's a 5-day work week, and there was 3 days was in last year. Okay, but is that the proper cutoff that it should be? It's still considered estimate. It should be lower, but I usually don't see accrued expenses listed when we go through it. It's usually the other common ones. I don't know what you've picked up on any of these.
Yeah, I think I like to call them guesstimations, and I would say a lot of the times when the clients are coming up with these, they don't really have any explanations behind it, and it's hard to get it from them. It's like, hey, why did you do this? And I would say most of the time it's hard getting it out of them. So sometimes it's easy enough as, like you said, it's just the 5 days or 3.5 days. I just had one, I think this last year, it was 5 out of 5 days. So the whole payroll should have been accrued. And there was a couple differences, and we were like, why is that? Why, it should be a 5 out of 5. And they really couldn't give me an explanation. So it's interesting to see what they come up with.
That's scary. That's very
We're
scary.
going to talk about bias.
Yeah.
But and it's so funny because you just said something that I didn't even synthesize until just now. Guesstimates, right? Not that particular word, but we're sitting here thinking about management bias
Yes.
and management influence, and we're beating the heck out of things when a lot of times you're working with people. I'm not picking on people that don't have the sophistication to do it, and if anything, they might be messing something up. The one thing that I said to you guys in the office that bugs me, particularly as it relates to deferred taxes and allowance for credit losses. I almost said doubtful accounts. Allowance for
Well,
credit
not
losses.
anymore.
Not anymore. Is when they have exact numbers.
Yes.
This is an estimate. How do you have an exact number for a reserve for credit losses?
Something fishy's
It's
going
an
on.
awfully accurate estimate.
Yeah, then you're reserving a specific item, it sounds like, and you need to estimate on the other ones. And I had a client one time, used to be on it, the furniture one, and I argued with the controller. I'm like, make it a round number, because not just because I want it round, but it's an estimate. Don't be so specific. That sounds like you're focusing on something in particular, and you have to consider some other stuff. So,
Yeah.
Right?
We love round
Yeah,
numbers.
and that's what
Yes.
reviewers, peer reviewers, inspectors, that's what they're going to think of when they see those specific numbers.
yes.
And they're going to say, well, this is so accurate. Like, how did you get there? And if the answer isn't, well, I had this invoice and I, got the invoice later and I just accrued it, or this is the payment that I made a few months after year end, then it's going to be really hard to justify that accrued
Yeah.
expense.
That's a great way to summarize it. If it's so specific, you should be able to support that number specifically.
I agree.
Yep.
Yep. So, all right. We could go a lot deeper into this. Unfortunately, we have very limited time, and they'll yell at us over there. These people over here at the side are very mean. In closing, here are some upcoming accounting and auditing events. On April 22nd, the Union County chapter is holding an A&A update in person in Clark. On May 6th and the 13th, there's a webinar on automating financial planning and analysis. And be sure to join Matt and Marissa Flood, who will be back for, I think, for another session too, right? For here.
Hopefully
right?
next time.
From Matt and Marissa Flood for a free webinar they'll be presenting on May 13th and the 20th on audit walkthroughs. Get info on these events and more at njcpa.org/events. And of course, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. Thank you for watching or listening. And Matt and Justin, thank you very much. I mean, you guys are here, and these arms are the only things that can say thank you.